Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 1st of August 2019, so welcome everyone, welcome to this Thursday's morning session where we're going to have a quick look at the markets, a few charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, also before we jump into the charts, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and also our JFD bank website here, but specifically our JFD research page, where you can find different analyses on the daily, that are produced on a daily basis, and I believe some of them could be quite useful for you. So feel free to check us out, and I hope you find them good. But for now, let's jump into the charts. Now, there are a bunch of instruments that I want to quickly run through today in this session. So the first one is going to be the FTSE100. Now, I looked at this one recently, and basically what I was saying, that I mean, we had a nice hold up here near the 7,707 zone. Of course, on Monday we did have this nice acceleration here to the upside, but like I said, it got held here near this 7,707 zone, approximately around there, and from which kind of you can see they retraced back down and now kind of tested the 7,590 area, and or you can always round it up towards the 5,600 zone so as well. So this is where it's currently set at. Looking at the cash index right now, we can see that it is currently a little bit sliding a little bit lower, so in a way we could even see an opening gap here to the downside. So now, I mean, for now, of course, if this continues to slide further down here, then yep, of course, it increases the chances for maybe a revisit of the 7,470 zone here, which previously acted as a good area of resistance and also area of support here. So you can see, so that's why for now we're going to be somewhat more bearish than bullish, and especially if it continues, let's say, sliding below the yesterday's low here near the, and let me just quickly put this one on the chart, and there we go. So near the 7,576-75 zones, something like that. So if it continues falling below this, then yep, we will consider the next potential target here, this little intraday swing high of the 25th of July, if that gets broken, and that little swing is, by the way, around the 7,542 zone. So, but if that fails to withhold, then yep, it could be opening the path towards this low here near the 7,470 zone. So keep your eyes on this one. In terms of the upside, if this, let's say, suddenly climbs back above the 7,635 zone here, then there is a possibility we could see a revisit of these this week's high, near the 7,707 zone, or should I actually correct myself a little bit here? This is the week's high near the 7,727 zone. So we could revisit that level again if we see a push back above the 7,635. So keep your eyes on this. It is a tricky spot, I would say. It's kind of bang on in the middle here. So for now, again, like I said, we are leaning more towards the downside, but then again, before kind of getting comfortable with lower areas, we need to see that good drop below the yesterday's low near the 7,573 76 zone, approximately around there, guys. So keep your eyes on that one. Jumping into gold, I looked at this one yesterday, and what I was saying that we needed a nice, good, clear breakthrough one of the highlighted areas before kind of aiming for a further directional move. You can see that, of course, after the FOMC statement yesterday, we had a nice slide here in gold. I mean, the US dollar strengthened, we saw this one pushing to the downside, breaking below the 1414 area, and now you can see that it seems that the commodity could be holding its path towards initially the 200 EMA here, which is around the psychological 1400, but it's slightly below that. We do have this our upside support line. This is a bit of a tentative one, but nevertheless we'll keep an eye on it just in case. Let's say we do have an overshoot here through the psychological 1400 level, and the other good potential target for support target could be seen near this upside line. So for now, like I said, we are more bearish on this one. We are aiming for the psychological 1400 level, and then we'll take it from there, because if this upside line fails to hold, then this could lead gold towards the areas like the 1386 or the 1382. We're not going to drag it further down because we want to see how this is going to play out here, but that's, like I said, in the scenario if we see a further decline below the 1400 and below this upside support line, and only then we'll target this 1386, 1382 zone. So keep your eyes on down. In terms of the upside here, if this suddenly climbs back inside this little range, this previous range, then this is where we'll still remain somewhat neutral, and for us to get comfortable with higher levels, ideally we would like to see a push above the 1433 zone. So keep your eyes on that one. USDCAD. Now USDCAD, I mean, of course, as you are aware, yesterday the Federal Reserve cut its rate by 25 basis points, but as widely was expected, and that was already priced in. And you can see that the pair USD-CAD had a nice, fantastic push to the upside here, and it broke above its key area of resistance near the 132 zone, approximately around there. This is where the pair is currently balancing at. To be honest, we are still aiming for higher levels. Ideally, we will be targeting for the 1.3230 zone, which is the high of the 21st of June, and slightly above that we do have another good potential target, which is around the 1.3245, and that's marked by the lows of the 10th and the 11th of June. So good potential targets here. Of course, we'll be very careful here, because if this continues to accelerate higher and reaches our these targets that I've mentioned, then in a way we could see at some point a small correction, maybe, because on the shorter time frames it would be quite overbought. So in a way there could be some place for a small correction, and then if it continues to trade above the 1.32 zone, then yep, we will continue monitoring the upside. For now, let's say in case this suddenly drops to the downside, for us to get comfortable with lower levels, ideally we would like to see a drop below this key area of support near the 1.3117-15 zone, approximately around there, guys. So in a way, actually, we could lower this one a little bit down here to capture this little swing, just for that better confirmation of the downside. You could in a way wait for a drop below the 1.3110, something like that, and then aim for lower levels. For now, we're going to be very careful here. Like I said, this is our scenario for the downside. I do understand it's quite a big move here, but to be honest, it's better to be safe than sorry. So a nice good drop below this 1.3110 could in a way open the path back down here towards some of these areas of support, key areas of support, like for example near the 1.3020, 15, something like that, and then we'll take it from there, see what it wants to do after. But again, like I said, for now we are aiming for a little bit higher levels here. Initially we'll be aiming for the 1.3230, and then maybe 45 here, and this 45, by the way, is the low of the 10th and 11th of June. The 1.32, which I said 1.3230, which I meant previously, that was the high of the 21st of June. So basically there are some good potential targets here, but keep your eyes around them because we could see maybe a small correction after that, and then if it stays above the 1.32, we could push and we could see another push higher. So let's see how this is going to play out. USDJPY, good run yesterday for USDJPY. It managed to travel higher, and this is what I was talking about yesterday in one of my videos. And basically, I was mentioning the basically I was talking about this potential target here near the 109 zone. Of course, that had a perfect test, and it continued traveling higher, where it met our other target at 109.20, where of course it did overshoot it a little bit, managed to test the area near the 109.32, but as you can see, quickly retraced back down, and now it's currently balancing around this one of our targets near the 109.20. So for now, of course, this is still everything looking quite positive. The only thing is that what we could do here is probably we could see something of a bit of a correction, maybe back down towards the 109 zone. If it stays intact, then if it plays a nice role of a support, then yep, we could see another leg of buying, potentially driving this one back towards the yesterday's highs near the 109.32. But if that fails to hold, we do have a bunch of good levels here above, and one of the important ones could be seen around here. And let me just quickly adjust this. There we go. So that's around the 109.93 area, so almost very close to the psychological 110. So that's why, guys, for now, be very careful. For those who are more on the cautious side, you could in a way wait until we see a push above this level here, 109.32. This way the pair would confirm a forthcoming higher high here, and we could then aim for slightly higher levels. But again, like I said, given that we did have a nice steep push higher here, there could be some room for a small correction up until maybe the 109 zone, and then if it fails to drop below this, then yep, this could be a good sign for the bulls to step in again. In terms of the downside here, well, I mean, looking at this picture, of course, if it starts dropping back below the 108.83 zone, the one that I've talked about yesterday, then yep, there is a possibility we could consider a possible slide towards the 200 EMA or this 108.37 zone, so keep your eyes on that one. AUDUSD, so took a major hit, and this is quite interesting here because it continues to slide. It did try to recover some of its losses yesterday, but as you can see, of course, after the FOMC, I mean, the pair took a dive and broke below its one of the lows near the 0.6859. I've mentioned that level as well yesterday. This morning it continued sliding. It tested the area near the 0.6830, and then from there reversed, and now it's kind of balancing slightly below its pivot, which is also marked by the low of the 30th of July, which is around that 0.6859 zone. So this one's going to be quite an important one to watch for us. But what I wanted to show you here, guys, is of course this level right here, the 0.6830. Now this, as you can see, last time it was tested here on the 18th of June, and it was a very good area of support. But more importantly, if we jump into a daily chart, this level here, the 0.6830, if we go back into history here, you can see where that level was, and this was basically also a very good area of support back in January 2016. So you can see that this level here acted as a fantastic area of support. So this 0.6830 also acted as basically the lowest point of 2016, from which the pair kind of traveled higher. Now the big question here is, can this level act as a good support again? Could we see some a push higher maybe here? So for now we're going to be very careful, because still I mean, technically from the short-term perspective, it's still looking quite negative. And if it's, let's say, slides below again the 0.6830 zone, then, well, I mean, this could turn out to be ugly for the pair, and we could see maybe a drop further down, maybe even going towards the 0.6743 in the near term. I'm not talking about the short term. Short term, maybe it could get held here somewhere near the 0.68 zone, but in the near term, if we see a drop below the 0.6830, then, well, I mean, this could turn out to be ugly, because the 0.6743 area is the lowest. Oh, let me just actually correct this a little bit. There we go, it's skewed. There we go. So, did I manage to catch this one? No. There we go. That's approximately around the 0.6738, or in a way we could round it up towards the 40 basically. So this 0.6740 area, this is what could be a nice potential target here for this pair. But like I said, for now we will only consider a possibility of reaching that area only if we see a clear drop, and ideally maybe a close of a daily candle below the 0.6830 zone. So keep your eyes on this one. If this decides to push back above the 0.6859 area, we may see maybe a small correction back to this downside, this tentative downside line, and then we'll take it from there and see what it wants to do. In a way, this line is so tentative. I mean, you could in a way ignore it, because some of you might draw it this way here. I mean, maybe just ignoring some of these other highs and drawing it this way. So in a way, what you could do here is, for those who are very cautious here, we'd wait for a push back above the 0.69 level and only then aim for higher levels, because any push higher here could kind of in a way end up ranging, end up kind of stalling the pair for a while. But if it travels back above the 0.69 zone, this could increase the chances for AUDUSD to travel back up again. So keep your eyes on this one. EURUSD, very quickly on this, so took a hit as well. This is what I was talking about. Basically, of course, it didn't travel all the way here towards the 1.1190, but it started selling off straight away and broke our 111 zone, and now, of course, this is not looking good for euro dollar. In a way, it still has a chance to continue drifting lower, and one of the levels that we're keeping a close eye on here is the 1.1024 area, approximately there, and that's the high of 2017's like high of May 5th. So keep your eyes on this one. Could be a nice good potential target. Slightly below there, of course, we do have the psychological 110 zone, which is actually, by the way, almost coincides with the S2, with today's S2 on the pivot point. So for now, be very careful. If, let's say, it decides not to travel higher, still we will remain bearish, because could see something like this happening. But again, like I said, for now, this probably becomes quite an interesting level here at the 1.1024 area, 25, something like that, and we'll see how it performs around there. Maybe it could rebound from here and push back for a small correction, because for us, let's say, to aim for higher levels, at least for a bit of maybe correction, then yep, we will consider higher levels only if we see a push back above the 1.1122 zone here, something like that, or 20 even, something like that. So keep your eyes on this little area here, which is highlighted in a wide rectangle. So for now, like I said, guys, it is more bearish than bullish. Keep your eyes on the 1.1024 or even the 1.10 zone. But if it decides not to travel straight away there, it reverses, let's say, starts reversing to the upside here, still we will remain somewhat bearish. EURJPY, very quickly on this one, I talked about this yesterday, and basically I was telling you guys to keep a close eye on one of these highlighted areas. So we did get a nice break to the downside here through the 120.75 level. You can see that the pair traveled lower, tested an area near the 120.33, rebounded, and now it's kind of getting held on near this 1.20.75 level, but this time, of course, from underneath. We are still somewhat bearish on this one, and we could in a way see another slide lower here if it continues to trade, of course, below the 120.75. If it continues doing that, then yep, we will aim for the yesterday's lows, and a break of which could send the pair towards the, well, for now the lowest point of July near the 120 zone, so keep your eyes on that one. And the last pair for today, very important, of course, GBPUSD. We do have the Bank of England today, and keep your eyes on that, of course. So we could see some movement in here, but what's interesting here is that, let me just jump into a daily chart on this one. We are balancing near this key area of support near the 1.2110. This area acted as a good area of support back in history here, and let me just show you when. This is what I'm talking about. This is was the lowest point of March 2017. So that's why, guys, if we see a drop below this could in a way open the path towards the lowest point of January 2017. So keep your eyes on this one, and that's approximately around the 1.1990, basically bringing the rate below the psychological 120 zone. So we are very close to that. Let's see how this is going to play out today. Like I said, it will be interesting if we see a break below the 1.2110. If not, if it holds, then of course our small rebound could be possible, and this is when we will aim for the 1.2250 again. Basically, that was the highest point of yesterday, the 1.2250. But if that gets a nice good break, then in a way we could maybe aim for a bit of a correction here, a larger correction to the upside. Because why I'm saying there's still a correction, because we are still below a downside resistance line, so we're still in a downtrend. So keep your eyes on this one. So like I said, from the short-term perspective, keep your eyes on the 1.2110 here today, and on the upside here, keep your eyes on the 1.2250, because this is the area where we'll only start considering slightly higher areas. Okay, guys, I hope you found it useful. Sorry for running a little bit over my time, but thank you very much for sticking around. I hope you enjoyed it. If you want to join me later on in my Traders Tea Time, as always, that's 13:15 GMT. For now, I hope you have a wonderful trading day, and I'll see you later. Bye bye.